Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Wednesday, March 4th. Firstly to the S&P 500, and here we see a continuation of the trend to the downside today, a candle making a lower high and a lower low. Very similar type of candle to the one that we saw for the previous day's trading. We have a black body candle, so once again the sellers are finding downside momentum in net terms between the open and the close, but a day that has this shadow on the bottom and a largish shadow, and it represents the sellers losing commitment down below these important support levels, initially at 2100, and then the market was able to close down below there, and then later in the day the 2093 level, a previous swing high that acted as support in the recent past. Importantly for the market, we've seen a close down below the Tenkan-sen indicator, the green line here, and that suggests that we may have a shift in the trend in that very short-term time frame from positive to negative, and it suggests that if the sellers are able to breach this support level down below 2093, we could see the market extending lower. Now, if we do see that trend continue, however, we are likely to see some strong support coming in at the top of this highlighted yellow zone of support and resistance around 2079, and that support has potential to extend down to about the 2040 level. Going back to this candle, however, we've seen the extension to the downside trend, but what we haven't seen once again is the sellers taking control, and that does raise some doubt about the potential for the trend to continue to the downside. We've actually seen the market close around the midpoint level, which suggests that neither side has taken control of this market, so there is a possibility of us seeing the buyers come back in. Now obviously with the close just down below 2100 may now act as resistance to this market, as may the previous support level at the Tenkan-sen around the 2102.5 area. I think the important thing to bear in mind here as well is that we do have the market continuing to trade up above the Ichimoku cloud, which tells us that we have a bullish market in the longer term time frame, and also above the Kijun-sen indicator, so a bullish market in the medium term time frame. One thing to watch here, however, is that the Kijun-sen is still pointing flat, and price action tends to be attracted back towards a flat Kijun-sen, so there is still an opportunity here for the sellers to come into the market, but we should be watching this 2093 level and the area extending down to around this swing low about 2085 very carefully for continued downside. Now just quickly looking at the Fibonacci extension of the previous first time frame downtrend, and we're examining the relationship of this current first time frame downtrend to the immediate previous first time frame downtrend. And here today we've seen the market extending down through the 100% level and testing down below the 161.8% level, being rejected from there. So with the sellers unable to maintain control and only a very moderately bearish candle with this forming this black body, it does suggest that there is a possibility of a change of trend to the upside, but obviously what we would require would be a candle with a higher high and a higher low to change that trend. And also that pattern that we were looking at, something of a flag type pattern, and the market has extended down below the bottom barrier but failed to close below there. Now with patterns we always require a close either above or below the barriers to complete the pattern. So with the market extending down through there, what it does is that it negates the pattern essentially, and it hasn't completed that flag pattern. So what we'd end up with is something like this if we extend the bottom barrier down towards that that lower barrier, and or the lower low, the lower trough here that the market is establishing at the moment, and it doesn't really become any sort of a pattern, maybe something of an inverse triangle type pattern, certainly not a broadening top type pattern, and nondescript pattern, and I think that we could probably forget about the congestion here now, with the market trading down through the swing low, or the low here that was established a couple of days ago, about 2095. In terms of the bands here with the S&P, and we see the market trading within the bands now. This is the third of the past 4 consecutive trading days that we're trading within the bands. So it suggests that that very strong bullish bias that we saw in this market in the medium-term time frame has ended, and it suggests that when we saw the market trading within the bands here initially, there was a possibility of the market attempting to mean revert, and that's exactly what we've seen. We saw the market test to the middle of the bands, which is the mean, and find support there. Now, with we're seeing some price rejection around that area, it does suggest a possibility of buyers coming back into the market. But if we do see them attempt to change the trend to the upside, we'll be watching the upper band at the moment trading about 21.14, 21.15 to act as resistance, and that will be a good test for the buyers. If they're strong enough to breach that area in a bullish manner, we then could have a strong continuation of the trend to the upside. Obviously watching the middle of the bands, roughly about 20.90, 20.91 to hold as support, and if that's breached in a bearish manner, we could see the S&P trading down to the bottom of the bands around the 2066 area, 2067. Next, taking a look at a stock, and we're looking at Apple. AAPL is the code, and starting with the weekly chart on the left hand side, and we see a very strongly bullish market trading up above each of the Ichimoku indicators, well above the Ichimoku cloud, and looking a little overextended in the depth away from the cloud. The market is also looking just a little overextended in the depth away from both the Tenkan-sen and the Kijun-sen, the green line and the pink line, but certainly a strong bullish market in all 3 time frames, and confirmed by the Chica span being above the corresponding price action. Looking at the relative strength comparative, up above the upper band, and suggesting that we have Apple strongly outperforming the overall index, which is a positive sign, so adding alpha to a portfolio. But looking at the volatility here at the bottom, and we see that we may be forming a cyclical high in volatility. So this current week hasn't finished trading yet, so if we do see volatility move down, then there is a possibility of a new downtrend in volatility, and that could manifest itself in the price action as either a retracement of this previous first time frame uptrend that the market remains in, or a congestion area, and it could mean an end to this strong uptrending price action that we've seen. Just looking on the right hand side here at the bands, and we still have a very strong bullish bias in this market by trading up above the upper band, and suggesting that if we do see a retracement, we're likely to see strong support coming in at the upper band at 123. So even a retracement here would potentially see the buyers come in at the moment around that area. To the candle from the previous week's trading, it has finished an indecisive spinning top type candle, the first black body candle in probably about 6 weeks or so, suggesting there's been a shift in net momentum away from the buyers to the sellers. But if we look at this current week as it's developing, we haven't seen the sellers strong enough to take out the low to establish a lower high and a lower low. So that's going to be an important benchmark for the market, that low at 126.61. If we do see the sellers come in, there is a possibility of, based on the candlestick chart, of the market trading down to around that swing low, or to the Tenkan-sen indicator, roughly about the 119 region, and that depends on whether the market can breach the band, the upper band, at once again 123. Now, just looking at the daily chart, and here we see very uninterested trading over this last week, and the market trading below the Tenkan-sen, however, and the Tenkan-sen holding as resistance for 2 of the past 4 candles, strongly rejected from there 4 candles ago, and the size of the bodies of these candles and the size of the range here is really suggesting that we probably should have seen some better selling from this region, and a good test would be the swing low here at 126.61. And if we see the market test down below there in a bearish manner, we certainly could see Apple testing down to the Kijun-sen at 120, 126. If the buyers are strong enough, there is an opportunity here for them to breach the Tenkan-sen at 130.11, and if we see a bullish close up above there, we could see the market testing up to the swing high at 133.56. Looking at the relative strength comparative, and previously strongly outperformed by trading up above the upper band, but now just performing in a not terribly strong outperformance here, and by trading within the bands and suggesting that we certainly could see the market retracing, but we are seeing some congestion within a very tight range here at the moment. To the bands on the daily on the right hand side here, and we've seen the market trading within the bands, finding a resistance at the upper band, and a possibility that if the market does come off, we could find support at the middle of the bands at roughly about 126.70. Just moving next to the Euro US dollar, and here we've seen what we were looking for, the market testing down below that 111.60 area of support. It has been an important area in the past, and this follows the bearish close down below the congestion area that formed over the last month or so, forming something of a symmetrical triangle type pattern, closing down below in a bearish manner. The 3 days following that bearish close saw support at 111.60, and now for today's trading has completed a strong bearish close, large black body, sellers in control, sellers committed, and also breaching the area at the swing low roughly about the 111 area, and it does suggest, with the sellers strongly in control and showing commitment, that there is a good possibility of the trend further extending to the downside. Now, if we do see the market take out the low of today's candle in the next session, a good possibility of the market trading down to the support at 109.